a great panel today, so I'm going to be very brief to give you a few comments first. My big takeaways from earlier in the day is that finally, Fintech is global. It started out being very much US dominated, then UK. Now it's absolutely global. I see huge growth, not just in Asia, but I am bombarded with startups in Africa, Latin America. Fintech is finally a global scene. From my standpoint, what's changed, first of all, is the quantum of money, the sheer quantum of money. You know, Fintech investing is now over 10% of all venture investing, according to CB Insights. And that's more than what it's been in the past. And while it's true that a handful of very large financings account for the majority of that, there's always been some very big investments in Fintech. So just because some are very big doesn't mean that the numbers in aggregate aren't right. So I would say that Fintech is by far stronger than ever. And when I look at this past year, or even just 2019, what's changed? First, the amount of money going into a startup. What used to be friends and family angel round, raising hundreds of thousands, is now raising 1, 2, sometimes 3 million. What used to be an A round, raising 3 to 5 million, now raises 10 million, 15 million, 25 million, is not unheard of as an A round. So bottom line, getting invested has never been easier. It's never been a better climate to be an entrepreneur. It's never been a better climate to be a Fintech investor. One thing that's also changed this year is the IPO market is finally open for large Fintechs. Look at the debut of Tradeweb just less than a month ago, valuing the company at $9 billion and trading north of the IPO price. Another thing that's different is the big are getting bigger. First Data, company valued at $24 billion, being acquired by Fiserv at market cap of $33 billion. That's a giant merger. FIS, which acquired my company, SunGard, 3 years ago, just announced that it was merging with Fiserv. Acquiring WorldPay in a $33 billion acquisition. So what's happening is the public market exit is finally there. The big keep looking for scale, but by merging. But as they look for scale, they also look to get more innovation, and they do that by buying small startups. So just after First Data announced the merger with Fiserv, they've done 2 or 3 acquisitions since. So from the company side, the ones getting the most traction are the ones that have really built their business model from a very basics model, looking at fast customer adoption and fast and very strong customer loyalty. And I would say UiPath and Monzo are 2 examples of that. Looking at the demand side, from banks and financial services firms, I would say it's never been stronger. Banks, particularly in the UK, are more willing than ever to look at new technology to solve their problems and to help them become competitive. So technology from startups is being used to fuel what has become an arms race between large institutions. I would say there's lots and lots of white space out there. In insurance or retirement, most people don't buy insurance. Most of that, the reason for that is because they're not afraid of dying too young. They're afraid of living too long and not having the money to support their lifestyle. So another change is the self-service model. If we look at young people, and if I use my kids as an example, my kids would rather eat mud than talk to somebody in the real world. like in the phone or in person. You know, to them, self-service is the only model that is valid. And that has led to massive digital transformations across the board. I would say another change is the gig economy. Whether you're an Uber driver or a panelist like me here, I'm a gig worker as well. You know, we have financial requirements which aren't being served by traditional players. I would like to say that my banks treat me extremely well, but that's mostly because of superhuman efforts by the humans involved, not because of the systems that support them in my gig economy. But bottom line, I would say the fintech investment world is stronger than ever. My startup was one of the first fintech startups ever in the early 80s. And now there simply is a gigantic category in itself. So I would like to now introduce my panelists. And I would like to start here immediately on my right, your left. Ian Connatty, Managing Director at British Patient Capital. Erin Platts, Head of Europe, the Middle East, and Africa at Silicon Valley Bank. Reshma Sohoni, co-founder and managing partner at Seedcamp. Vinoth Jayakumar, investment principal at Draper, Esprit. And finally, Tim Levene, CEO and partner at Augmentum Fintech. So please give my fellow panelists a warm welcome. Erin, most startups use you. I think you have your pulse, your finger on the pulse better than anybody else. What do you see in fintech today?
Sure. Well, good afternoon, everyone. I guess I'll start at the 30,000-foot level, and then my fellow panelists feel free to jump in and agree or disagree as we go. But at Silicon Valley Bank, you're right, Cris, we've got a really unique position in that we've got good coverage across the globe. So I guess adding to your opening, you know, we are coming off a phenomenal year in 2018 with respect to fintech investment, right? Over $40 billion raised globally. Even if you strip out some of the outliers like an Ant Financial, it's still 100% year-over-year growth. So that's hugely exciting. Like other industries, we're seeing the number of deals, particularly at the early stage, decrease. I think UK is 5th year running where early stage fintech investment has gone down, but what we're seeing is a doubling down, right, of these companies that are at scale, which I think creates opportunities and challenges, which I'm sure we'll come to. I think the other interesting thing is corporate ventures has always been a hugely important part of innovation investing, but even more so with respect to fintech. In 2018, I think the data was 34% of all venture-backed rounds had participation from corporate. Given the regulatory landscape, given the governance and infrastructure required, that marriage between traditional venture capital and corporate activity is hugely important, and it's great to see some of these corporates starting to more put their money where their mouth is as opposed to just supporting maybe in other ways or not. So, and I think we're coming off, again, a really phenomenal year. We'll talk about some of the challenges and, I guess, opportunities with respect to regulation and talent, but all in all markets are up and to the right, and there's a lot that we can still do here in the UK.
I think just picking up on the investing part of it, I think you're absolutely right on early stage. You know, so we at Seedcamp are writing kind of the 100 to 500K checks into your first round of capital, so very much pre-Series A, and I think some of those stats around early stage are you know, follow indicators to what we did ourselves in the last few years. I mean, I have to say we invested in what I call the low-hanging fruit of kind of, you know, challenger banks 3 to 5 years ago as that first check-in, right? And they've then since gone on to raise seed, Series A, B, C, D, on and on over the last couple of years. But we really stopped investing in that B2C arena at least a couple of years ago and paused while we, you know, put more efforts into B2B. And also I think we've now, I think we're investing more again, because one of the things that's happened is, open banking has become an actual reality. So it's actually getting implemented now in 2019 onwards. And so we're seeing a whole new fresh group of companies and startups that obviously won't hit your radars for another, 2-3 years, that are really kind of bringing open banking into reality, and almost like a fintech 2.0, which will be interesting to see how our own companies like Revolut, Monese, TransferWise, and others navigate this whole new crop of companies. Yep. So very true on early stage investing.
I totally agree. Vinoth, have you seen changes in the sources of capital and what's sustaining all this?
Well, we certainly have. I think, with the help of Ian, we sort of at Draper, we sort of rethought what venture capital should look like. So for example, now we've 2.5 years ago IPO'd ourselves. And so as a result of that, we become an evergreen vehicle. And so we're no longer capped in this 10-year captive fund cycle anymore. And that in itself is one way in which you can do an evergreen structure. We've seen a host of EIS funds backed by the government. We've seen a host of VCT funds backed by the government. And so that theme is continuing to increase and improve.
I agree. I think fintech across the tech landscape, fintech benefits the most from permanent capital.
Longer term.
Yeah.
I think that's right. I mean, we've seen, and there have been numerous reports, private companies are staying private for longer. So from 7 years to 14 years, and the traditional 10-year life cycle of a fund, in particular in fintech, doesn't always work. I think one of the motivations for us at Augmentum to become the first UK-listed fintech fund was exactly along those lines. One, to try and unlock this institutional capital that has intellectual curiosity in this emerging asset class, but are public markets investors and are trying to wrestle with the way, how do we get exposure to this emerging asset class?
I mean, that's when I moved to the UK, that's one of the things that surprised me the most, just the relative low percentage of asset allocation by pension funds in particular to private companies at any stage. I've puzzled on it. I have not solved the problem. How do you see it?
Well, if you have the answer, then let me know. I think it's a challenge for all of us. I think part of the challenge is we are 30, 40 years behind the valley, and the CIOs in pension funds don't have the experience of investing in venture, despite its performance as an asset class in the last 20 years. And the inherent conservatism we see amongst a lot of these institutional managers creates a resistance. And I think if you want a rationale and a set of reasons as to why to not invest in venture, you can always come up with some compelling reasons. And I think we need a new set of CIOs or a different approach, because I think the pension fund community in particular can unlock huge opportunity, in particular in our industry, not just venture capital, but fintech as well. And I think there is a lot of talk now about it. I hope we're on a path, but so far it's not happening quickly enough.
Yeah, and I mean, there's been a change at Legal in General, and not to call them out, but people like Paul Miller coming on board and so forth. So I think there is a change in culture and a much more open dialogue with folks like us about what's venture and why is it attractive. And I think one of the biggest things I keep saying is, look, we're investors in UiPath, which you mentioned before. You take TransferWise, et cetera. These companies, each of them should have gone public and under the old model sort of a year or two ago, and at lower valuations, and they're not. They are staying private. So I think if you are pension funds who've allocated money to managers in the public sector, you're coming into these companies far later than the opportunity historically would have been, and that's a real wake-up call. Is you're leaving those returns to all the private sector.
I just add to that to say that one of the things that some of these pension funds are saying to us is, we're not thinking about access to the venture capital class. We're thinking about backing the next layer of fintech companies. So if you happen to be the gateway there, great. But actually, they are already thinking about how do we back TransferWise, how do we back Revolut just before the IPO. So that mindset is already shifted. It's just that we happen to be the gateway to those deals, but we don't have to be. They can go direct. And so having a public model allows them to do that pretty quickly.
Yeah, because the direct model investing by pension funds has been something that has been done extremely well by people like the Canadian pension fund, but they are the exceptions, not the rule.
No, I think if you look at the data companies that have gone public, the growth rates that they have in that first year are half in the previous 2 years. And if you are a public markets institutional investor, often what you're seeing now, they're coming in when these businesses in some cases are fully cooked and they're missing out on some of that upside. If you want to really benefit from that, you need to get in a couple of years early, and that is I guess one of the key motivations for trying to bring these institutions on board earlier.
So obviously we're an LP, and I guess we're having conversations with folks like that all the time, and I think particularly in Europe, to the extent that these institutions have an experience of venture, often it's some years ago and it wasn't necessarily a positive one, and I think particularly when you're a liability-driven investor, it's hard to understate quite how hard it is. Everybody has an investment committee and it's all right for us to kind of sit here and make the case, but it's actually very, very difficult to kind of turn the supertanker, if you like, and navigate back towards venture. I mean, one thing I would say, interestingly enough, is we see quite a lot of US institutions who actually understand venture incredibly well. So actually there's no, again, if you're the VC, there's no education about what venture is, why, you're not the one selling the asset class effectively. And we see a lot of our GPs spend quite a lot of time as the spokesperson, if you like, for everybody, not just for their deal. And so I think there's certainly some efficiencies in that market to come, actually, if LP rosters are going to fill out. And it's a really important thing, because actually, in your introduction, as you were saying, with round sizes going up and so on, so are funds. And actually, the average size of the fund in which we now invest is over double what it was 6 or 7 years ago. So that means if you're a GP, you've got to raise more money. And where's that going to come from? So it's fine people like us doing more, but there just have to be more LPs in time who understand and do more than one as well, to do more than one or maybe 2 investments a year, but who systematically invest.
Ian, I want to just to step back for a second. I mean, fintech, people think of it as a vertical. To me, it's a world, right? It's at least my world. It's a world unto itself. How do you categorize it? How do you see this? Just so we have some basic terminology straight. What are the subsectors, and how do you view it?
So, I mean, it's kind of interesting actually in preparation, because I knew you were going to ask me that. Sort of. Looking back through history, I've been an LP just over 10 years now, and actually, if you look at our very first investments back in probably 10 and 11, they were kind of retroactively labeled fintech, actually. Often, at that time, it's a piece of technology looking for a use case, and it just so happened that it was financial services. And that, exactly as you've just described, actually, you had this kind of first wave of very specific financial products or institutions, like challenger banks, like personal finance or wealth management. They're very, very clearly financial products. And actually what's happening now, I think, and by the way, the answer to your question is you can call fintech whatever you want to. I mean, but back in those days, it was kind of specific financial products. And now we see 2 things. One is that suite of products has expanded. So for example, insurtech's now a thing, and so that the number of financial products has gone up. But actually, probably the more interesting thing is it's become harder to tell where fintech stops and where other things like SaaS and AI begin in enterprise software. And actually, again, because I knew you were going to ask, it's not like I have this off the top of my head, but it turns out that 38% of our fintechs are also labeled SaaS, because actually they're SaaS companies. And they're not always exclusively selling to financial services either.
Yeah, probably 100% of them now are also labeled AI. So.
Yeah, exactly. And you take AI and machine learning, and you take financial services, and you apply it to a problem. And you couldn't do that 10 years ago, but you can now.
Yeah. I want to stay on the challengers. Reshma, roughly 25% of funding has gone into challenger banks, just roughly speaking. If you fast forward, given that many of those in the early days, if you fast forward in time, what's the end game? What is the landscape going to look like?
Yeah, I mean, I guess, and I'm sure Tim also has views on this. I mean, if you get above $500 million in valuation, consolidation becomes very difficult, or for the larger players to buy you becomes difficult, right? And then there's a whole host of challenger banks or companies that probably won't reach that level. So I mean, I guess I look at it in two ways. One is those who can't, reach that kind of a level will get picked up and brought on board with institutions, whether that's fintechs themselves or financial services companies that are struggling to ultimately reach, us as end users. And then I think the race is really on for, several of our companies who are all still under, especially if you look at the UK market, still all under 10 million users. Mm-hmm. I guess you could even say 5 million users. I mean, they're inconsequential at this point, right? So, and I'm saying that sort of backing, being in Revolut and TransferWise and others, it's still inconsequential. So for me, a lot of money has gone in. It's really to prove out where the scale is and hitting those, obviously at least 10 million users, but really getting to that kind of 100 million user number, and that's where you're safe, and you're probably you're on your way to becoming a platform and a really big fintech business. I think a lot of the rest of it. Time will sort of run out, and
so you're saying the consolidation phase is still ahead of us. Yeah, very much ahead of us.
I think inevitably. I mean, I think there are a large number of these challenges, whether it's across the SME or consumers, across the UK, across Europe. Some of them have been far more capital intense than others, and those that are capital intense, the unit economics haven't been as powerful as they thought they might be, and they need a business model. And the novelty will soon wear off of multicolored cards and metal cards and the like, and the points of differentiation are reducing as well. So I think the cream will rise to the top, but scale is really, really important.
Well, you say that about colored cars, but I tell you, whenever I'm in the queue and somebody ahead of me pulls out one of those orange-red Monzo cars, as long as I can determine it's not going to look weird, I ask them, hey, how do you like Monzo? And they love it.
Yeah, so
but I mean, they love it. They love it to a degree that they've never loved a bank before.
Yeah, and that's a great thing. So it's not just about the color. You need to do more. You need to have an extraordinary product. You need to have phenomenal customer service. You need to be transparent. You need to do all of those things. And I think those challenges that are doing that in parallel, that can continue to grow and have a viable business model, will thrive. But inevitably, there has to be consolidation. And if you're an incumbent, and personal view is incumbents, ultimately will be or attempt to buy, those that break through, and perhaps those that don't quite get there, but have an underlying customer base that they want to get a hold of.
I think the interesting thing from where we sit is, you do have these challenger banks that have grown to a really good size and scale, have created strong unit economics, but it's how do they horizontally then grow and expand. To be a single vertical or single product challenger, it's going to be
really
difficult
tough.
to be defensible. Yep. So then as you go horizontally, you get, or up market, regulation changes really, really quickly. Mm-hmm. The infrastructure and compliance costs go up very, very quickly. And I think that is where we're going to see some real bifurcation of the market.
And do management teams and investors get what that entails? And of course some do. But.
Yes and no, right? I have the fortunate spot of managing a highly regulated bank in EMEA, and it's one of these things where it does cost more, takes more time, and I think the other part is having the stable of NEDs to then go and support some of these companies. That's a big area of growth and something that we're looking at. Is how do we supplement some of the more traditional board members that can scale a company unbelievably well, create a market, create traction, create brand with more traditional governance, regulatory-led talent.
I'd just add to that to say that actually what we have seen so far is unbundling of banking. So Revolut came out and said it does FX really well, and somebody else says Nutmeg would do wealth really well. But to Tim's point, most of them have struggled to prove the unit economics. It has been an acquisition strategy. And so what I think is going to happen is rather than consolidation, there will be a rebundling. So a Revolut will say, oh, actually, we can do investments too. We can do wealth too. And everybody starts to do that to basically amortize the cost through which they've acquired those customers. And so more than consolidation, I think there'll actually be more rebundling.
Mm-hmm. Through consolidation.
They build their own.
In some cases.
Yeah, I mean, I think on that point, the question is trust as well. I think we've started to see it with some unbelievably fast growth fintechs, and the challenge that we have an incredible regulator here in the UK that has really helped fuel this growth, is that they hold their nerve as well. And these fintechs that have taken missteps have the opportunity to rectify them. We can't underestimate the importance of governance and all that comes with it. But there comes a point where you want these businesses to be able to thrive and to get to a certain point and then start to overlay the governance, the right board members. You just can't do it too early. And that is the challenge.
When's the right moment?
And I think if we're to maintain as the global leader in fintech, we need our regulator to continue to be progressive and not to be spooked by headlines in the Daily Mail.
I want to switch the topic to that. What's happening in Britain with Brexit, et cetera. And I mean this very positively, because my family and I, we decided to move to the UK. Okay, so to move here so that I could invest and I could mentor fintechs. I got here and I found that most of the fintechs I was investing and mentoring were also immigrants. So then I said to myself, this is really an incredible societal experiment. What did the UK did so right to attract people like me to move here, to invest and mentor startups, and to attract the entrepreneurs who are the ones in turn creating the jobs here? Is that a special point in time that is now changing, or is that a permanent part of the UK landscape?
I mean, it was a special point in time, and I think when we talk about the successes we have today, they aren't instant. They aren't the last year. They're very much 7 to 10 years in the making, and that special moment was because of open borders and it being an incredibly attractive place for talent to be warmly welcomed from everywhere, and have I came in myself on the old rewards or the points program, and it was very clear, kind of tier 1 through 4, where you fit in, what you needed to get points to qualify. And since that time, that's been taken away, and then things have changed a lot, right? So I think talent's just crucial. Also the infrastructure around just hiring and option schemes, and the EMI has been an incredible institution here, challenging sort of at the same level of a US versus what's been some terrible practices across Europe. So that's again, you can recruit people from taking offers at Google, Facebook, Amazon, and so forth into your startup, which is kind of unheard of if you are in Romania or wherever, where the best job is a Google or Amazon, right? And so I mean that's been special for 7 to 10 years, and I'm a hardcore Remainer, so I complain about this a lot, and we definitely have such the opportunity to fuck it up, and we certainly will if we kind of pull back on some of the things that made this a brilliant place for people, immigrants like me and you. So, and to come over. So.
Yeah, I mean, we do every year. We've been running this survey for over 10 years, where we interview our founders globally, and anywhere and everywhere you go in the innovation economy, talent is the #1 most critical issue. So we have to find a way to continue to not just allow, but encourage. And welcome people working in UK innovation. It's #1.
What as you step back in just the last couple of years, what has surprised you the most? And what do you find really surprising about the state of fintech right now? And let's just take it one by one.
So actually, again, according to your intro, we're pretty much on the market. About something like 12% of our portfolio is fintech, but it's over half of our companies that have reached $1 billion plus valuation.
Wow.
So actually, that's probably the most surprising thing about fintech in particular for us, is actually the role in particular it's played in that scale-up agenda. And again, we're British patient capital, so our whole raison d'etre is about not just creating scale-ups, but hopefully scale-bigs. And so actually, it looks to us like it's a particularly interesting area where this confluence of scale-ups and capital and all the rest of it's all coming together.
Erin, what do you find surprising?
I guess, I mean, not dissimilar to your point, I've been here for about 12 years, and I have to say that the teams and I think the businesses that we've created from a fintech perspective are stronger than anywhere else that I've seen globally, right? I think we've gotten a really amazing ingredients here around talent, around regulation, right? Having a really friendly, open regulator, having the corporate financial institutions, insurance companies actually dive in and work with these teams in a really open entrepreneurial way. So that to me, I've seen more innovation there, especially if you compare the openness of corporates. You know, corporates on the enterprise software side, outside of bank insurance, are really, really slow to engage with our startup community compared to other places. So I think it's just a good surprise of just the continued increase of quality and really the ecosystem coming together to pull through and create, probably the best place to start a fintech company.
I think rather than being surprised, I'm more inspired by the contrarian mindsets of people like Nikolai, who founded a bank, who actually just sat down and thought about, actually, can I recreate HSBC or Barclays, and just went for it. I think that is in itself inspiring, and that it goes to tell you a little bit about the immigrant mindset, but how they want to completely change the way in which they've been served before.
Yeah, I mean, I think ultimately what surprises me are how long it's taken. It's an industry of extraordinary size, and here we are in 2019, and we're just now, I think, at the end of the beginning. These large financial institutions, the internet is not new in the last 5 years. It's been 20 years, and we've seen other industries really transform. And I think the opportunity, the exciting thing from an investor point of view, from an entrepreneur point of view, is there is huge amount of upside still to come. We are still so early in this journey. If you look at the penetration rates in the sectors and the subsectors, it's largely single digits. It's just surprising. It's been the slowest industry to really disrupt. We just need to look at insurance, and that is at a snail's pace. But we've got a $1 trillion revenue opportunity to attack there. So we're on day I wouldn't say day 0, but day 2 or 3 in that market.
For me, Reshma, what surprises you?
Well covered.
What surprises me, I mean, when I did my startup, we got a handful of clients in New York, but then within the first year of actually being in business, most of my clients were in London, and that surprised me. I pitch new software, new companies to banks or insurance companies. It surprises me that it's the British ones that adopt it first, that are willing to try it first. I don't know why. Maybe I'm slow to learn, but after 30 years, it still surprises me that people at banks and insurance companies in the UK are more willing to try something new, even if it's untested, even if it's a fledgling startup. They'll just give it a go.
I mean, it's a kind of interesting thing about the UK that London hosts both the financial centre and the technology centre of the same country, and so the kind of creative hub theory, the idea that you get just random collisions between operators in the same market, has been well linked with kind of innovation and creativity and all that. So I think actually that's something that you see about the UK, to the detriment potentially of the rest of the UK. Actually London really does dominate the fintech scene. Something like 80% of the companies and 90% of the money goes to London companies. So actually one of the challenges for the UK actually is how you get that out into other hubs like Manchester and Leeds and Edinburgh and so on.
Yeah. I don't know. I'm extremely excited. I think this is. I see it also as you called it the end of the beginning, but it really, to me, I feel like it's beginning. I look at I'm bombarded by people with amazing ideas, and by investors who are patient enough to see them through, even in fintech, which does take a while to cook, as opposed to general tech. but I'm very bullish. I very positive view and very few negatives. But I just want to invite my panelists to say parting words.
Well, I think I mean, from our point of view, I think the challenge for us as an industry, as a set of entrepreneurs, as a set of investors, is to continue to beat the drum of the UK, the extraordinary opportunity, the talent that we've got here, but also, to embrace the challenges over the next couple of years, in particular that Brexit will create for us. I think talent, which Reshma has articulated very effectively, but also unlocking this enormous pot of capital that is so far seems to have been untouched in, towards venture, and we need to do a better job of articulating the opportunity to these institutions, to these pension funds, to these endowments, because there is an incredible investment opportunity.
I agree. Next time you all see a government official or a regulator, tell them that they must start taking steps to allow pension funds to invest in startups and in VCs. That is what made Palo Alto what it is now.
I think on that point, we do have the most forward-thinking regulator in the UK. In Europe, it's by far number one. We have the capital, we have talent, we have all the things we need to create successful fintech companies. And we've already seen, to Ian's point about, 10, 12 fintech unicorns. And so I think that in itself is already telling about what the future is going to look like.
So yeah, I mean, next couple of years, it's to scale. All these companies, having shown a lot of potential, need to catch up with their valuations and really scale into the double-digit, triple-digit kind of user bases.
Yeah, and it's nice to come off 2018, which again was the best year in many respects, for exits for European tech. Right, so that recycling of talent and capital, I think it leaves us really well placed. And there, obviously some great ones in fintech and some great ones outside of it.
And for us, I think it's this tension between building big businesses, which takes a very long time, but ultimately at some point you have to turn it into cash. And actually that's the bit.
Spoken like a true
LP.
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 But and that's the bit actually where we not just in fintech, but generally in the industry.
But turning into cash, I mean, I believe in this circle of life. It's it creates a new beginning for lots and lots of new opportunities. Yeah. So on that note, I would like to thank my fantastic panelists and to the organizers for inviting us. Thank you.
Thank you.
Thank you.